Michael Saylor believes Bitcoin is no longer just a speculative asset. He argues that Bitcoin has evolved into digital capital, a new foundation for the global financial system. In his view, Bitcoin is comparable to gold, real estate, and equity, but it is superior because it is scarce, borderless, and now increasingly recognized by regulators as digital gold. Saylor describes this moment as an inflection point. When the world's largest financial regulator aligns, global adoption accelerates. He positions his company as a prototype digital treasury, accumulating Bitcoin and removing supply from circulation. He compares it to winding up an engine, storing digital energy for the future. But he makes a critical distinction. Bitcoin is capital. Capital is volatile and long-term. Many investors reject it because it doesn't produce cash flow. So the mission becomes this: transform digital capital into digital credit. He uses a simple analogy. Giving someone land in New York is capital. Giving someone an income-producing instrument is credit. Strategy's approach is to over-collateralize Bitcoin-backed instruments. Even if prices drop, the principal remains protected. The yield is generated by structuring preferred shares and notes that convert long-term appreciation into predictable income. He describes a product ladder. First, long-duration digital credit paying around 8 to 10%. Second, a junior version offering higher yield for investors willing to take more risk. Third, something he calls Stretch, a short-duration instrument designed to behave like a one-month Bitcoin treasury bill. Stretch is engineered for simplicity: monthly dividends, minimal volatility, near-par pricing, high liquidity. In Saylor's model, this flips traditional credit. Digital credit is structured to favor investors over institutions. From there, he extends the concept even further into digital money. Imagine a stable value of 1. The goal is to pay around 8% yield with minimal visible volatility. This could power yield-bearing stable instruments. A money coin that pays 8% instead of 0. A digital money fund with a stable net asset value. Bank accounts that appear stable but generate meaningful returns daily. It changes how we think about savings. In this framework, Bitcoin holders create the capital layer. Treasury companies convert it into digital credit. Banks wrap it into digital money. Then he scales the idea to nations. First, sovereign wealth funds accumulate Bitcoin to capture growth. Second, national banks custody Bitcoin and issue regulated credit, attracting global capital. Third, regulated banks offer yield-bearing accounts, pulling trillions into forward-thinking economies. Countries with clarity, courage, and competence will lead the digital transformation of capital and banking, and capital will flow to wherever digital money works best. Bitcoin, in his vision, is not just an asset. It is the base layer of a new financial system, a global foundation for the future of money.